raising real estate standards. We're coming up on the mid-year of everything, and we'd like to do a market wrap up, kind of see what's going on in the market, a little mid-year review. And today, it's the 26th as we're recording this today, the 26th of June, and there is a lot going on in the world. There's a lot going on. Both in the real estate market and just the general geopolitical world as a whole. So all that stuff factors into us and what real estate agents are feeling, and we're going to kind of unpack a little bit of that, because let's just be honest, a lot of agents that have been in the business for less than 5-6 years have never experienced what we're going through right now.
Yeah, I think that's the biggest point of what we're going to talk about today is just like, we're hearing from a lot of agents. They're like, what's going on? What's going on? This is crazy. I'm scared. I'm fearful. I'm this, I'm that. And it's like, we've seen this before.
Yeah.
And it's just kind of like, hey, this is what we used to, this is how it used to be.
Right. And let's just, what I really want to kind of before preface everything with is, when people ask, how is the market? Most of the time they're looking at themselves and referring to how busy they personally are, not necessarily looking at data and looking at the holistic picture. It's just, how does it feel to me? And I'll be honest with you, walk the halls of our office and you can get 5 different sets of answers of how people feel the market's going. Some people are really busy. Some people, are extremely blessed with the number of deals and how quick the market's moving. Some people are not. Some people are experiencing sluggishness and slowing of the market. And so it really is, obviously everything's individual, but we're going to unpack and kind of look at see what the market's doing as a whole, data-wise, but plus also recognize that some people are experiencing things that is a little bit different.
Yeah.
Looking at, I was in our area, we have seen an uptick in inventory. I think that is indicative across the country. But one of the things that we are seeing is I wouldn't say a spike, but a gradual raising of inventory. Back in 22, 23, I'm not sure the exact dates, before the rate spiked up because of trying to tame in inflation. We had roughly around 12 to 1,400 active homes on the market, give or take. Now we're at about 4,700. What does that mean? That's just a number. Well, what it means is the buyers have more choices, and realistically, there are less buyers. That's really what there's not like there's more homes. There's less buyers in the marketplace right now.
Well, that's what I was going to ask. So if inventory is going up, then that only happens from 2 things. Number one, houses are going on the market faster. So think of 2008 when people had to sell their houses. Inventory spiked because houses were going on the market faster than buyers were buying them. Or number 2, and I think you just alluded to this, there's just fewer buyers out there for the number of houses that are coming on the market. So I was going to ask you, what's causing this uptick? And that's really the only 2 things it could be.
It's a demand. This is 100% a demand issue. Okay. You're seeing less purchases going on. You're seeing that across the board. There's fewer transactions happening. The interest rate environment that we're in, we're still in an elevated interest rate environment. It's not like there's a whole bunch of home builders out there that are just throwing up a whole bunch of product because they're incredibly affected by interest rates, right? Because most home builders are not using their own cash to fund construction. They're borrowing the money to construct the properties, and with elevated interest rates, they're not willing to take that risk of holding on to properties. So you're not seeing a massive influx of inventory there. It's barely keeping up with population growth, realistically. I mean, if it is even keeping up with population growth. But no, this just really is, people are sitting back on as a general, they're sitting back and not moving. They're still there. You still have the interest rate kind of block where they're sitting at 2-3% interest rates, and they're just not willing to take it on. They're not willing to take on that move, even though life would indicate that they should be. They're not willing to take that move right now, and so that's really, it's been a demand issue.
Okay.
So, but what does that mean? You know, and realistically, guys, it's not that deals aren't getting done. Deals are still getting done. It's just the pace in which deals are getting done are slower. What home sellers are experiencing is a little bit different than what home sellers experienced, 18, 24 months ago. Days on market are increasing. Is it high? No. I mean, we're at about 45, 47 days on market. We're still well within that seller's market time or kind of range. But sellers aren't able to price their house at the highest, above market value and have a bidding war. Mm-hmm. It's less of that and more of, I got to price it appropriately. And even if I price it appropriately, I still may have to wait. And so that's a real tough thing for folks that have never been through that, real estate agents that have never had to have conversations with the sellers that, that are sitting on the market for 75, 80 days. And they're like, oh, what do I do? Okay, well, let's look at it. You might have to have a conversation that maybe you've overpriced the market. And a lot of agents don't know how to do that. They don't know how to start that conversation. They don't know how to navigate that conversation and do it in a way that it doesn't come across as you didn't know what you were doing or something was wrong and it's not it's the market. The market right. does not lie. You just have to be able to navigate those things.
Right. And we've talked all along. I mean, you go back the past 2-3 years, we've used the term professional, be a professional in this market. And I think that's what you're really starting to see now is this is a professional market. There are fewer people that, there are fewer buyers that are out there, like you said. So it seems to me like you're not having this run to the internet to get information. People are still doing it, but it seems like the people who have maybe their leads have come down a little bit are the ones that are just waiting for those internet leads to filter through. And the ones that it seems like they may be doing a little bit better are the ones that have built the relationships over the time. And you're kind of seeing that piece of it. I don't know if that has anything to do with less buyers, but I would imagine it seems like when there was more buyers out there, more people they run fast to the internet, this, that, and the other. And as the pace slows down a little bit, it seems like I'm going to reach out to so-and-so that I know.
I think you're spot on. I think it comes down to a trusted advisor. Mm-hmm. Realistically, in a fast-paced market, people just had to react quickly, and they thought that they could react quicker by pushing a button versus calling someone that they know and trusted. Whereas now a lot of people are reaching out to that trusted advisor to help navigate them through this. And I think along those same lines, those that have been in this game and their lead source is more of that referral-based lead source where there was a warm handoff, there was a sense of giving optimism that this person knew what they were talking about when they went into it. It makes those conversations in difficult times a lot easier mm-hmm. because they came to the table with a recommendation that they're trusted and knew what they were doing versus that cold person who had to navigate that know, like, and trust in a very short period of time with no recommendation. And it empowers that agent to help that person get along in this process and to navigate some things that are unexpected. I don't want to say tough because selling real estate is not really a tough situation. It's tough when it doesn't meet your anticipation of what you think your property is worth, and maybe you think your property is worth more than the market's willing to give you today, and that's not fun, but having someone explain it to you so that you can make good decisions is a lot easier when you have a trusted advisor. Mm-hmm. Yeah. But as we're looking through this, let's kind of look at the market in general and look at some data points. So right now, interest rates are hovering in that. They're in that short channel, that 7 to call it 6.7. Kind of a 30 basis points range, and it's been bouncing around there for a while. Is it going to move outside of that? Is it going to drop below that? Is it going to go above that? I don't know. Nobody knows. There's too many factors that are involved in this that are outside of anybody's knowledge base. I mean, Japan can sell off a whole bunch of treasuries, and the interest rates will shoot up. The Fed could drop the Fed funds rates, which could cause the mortgage rates to drop a little bit. Nobody knows.
Right.
The issue is those are uncontrollable things. They're just uncontrollable.
Well, they're controlled. They're just controlled by somebody other than us or the market.
Well, but there's not a single controlling factor when it comes to mortgage rates. There's not one arm that is moving this thing. It is a bunch of different things that are complex, and nobody has direct control over the movement of it. Yes, there are people that make decisions that impact it, but the most important thing, in our market, as agents are looking at, I just want people to understand in different financial times, different economic times, there's a ton of opportunity. Mm-hmm. And when you look at, let's just get it reeled out into North Carolina, and let's just get it reeled out into the central part of North Carolina, there is a massive amount of things going on that is pushing our area to growth, prosperity, great times for the real estate market. And that's going to come in waves of prices increasing, but also transactions increasing. The number of deals will be increasing. One of the things that was just recently announced in our area, which I'm sure a lot of our listeners know about, is there's been several companies choosing to the Triad area to locate home. Jet Zero is a airline startup, airplane manufacturer startup, and they're building an airplane that is supposed to reduce the cost for airlines by 50% in the fuel range, and they're coming in and they're proposing close to 15,000 jobs. Each one of those jobs is a home. Mm-hmm. That's 15,000 new homes on top of everything else. That's just one company bringing those things in. And yes, some of those people will be already citizens of the Triad, but there's going to be a lot of influx of people moving to the area. So those are things that, as you look through it, just because interest rates are where they are today, they're not always going to be where they are today. But I can tell you what, the price of your home is going to be higher. So if you're not doing something based upon interest rates, if you're already in the game, you're going to be able to see that appreciation. But if you're not, you don't own a home, not buying a home is a bad idea, regardless of what rates are.
Yeah, and I mean, at the end of the day, we always talk about rates. Rates are it's something sexy to talk about in the real estate business. But at the end of the day, I most people look to see what their monthly cost is going to be before they sign that dotted line to buy that house to attain that mortgage, right? Yeah. Mm-hmm. I mean, at the end of the day, that's what can I afford X amount of dollars monthly to buy this house when it all comes down to it? That has zero to do with the interest rate. Now, the interest rate could make that number go up and down, but if you find this house that you like and you can afford it, why would you not do it? You can always refinance later. 100%. It's like you said, the prices are going to continue to go up, and the buyers that are out there that are scared because of interest rates, I'm telling you right now, you're missing an opportunity.
What you save in interest rates in that is peanuts compared to what you gain in equity.
Oh, absolutely.
I mean, you're literally stepping over $100 bills to pick up pennies, and it just doesn't make any sense. But in the world that we're living in today, we're all payment driven. And if it doesn't meet the payment, I get it. But maybe what you get into isn't what you want. What you're the dream. Yeah. Getting into the game is the most important.
Yeah.
So, the market itself is not bad. The market is good. I would just say it's important for agents as you are digging into this, know your numbers, know what's going on, and each price point is going to have different nuances. Luxury homes are going to have a different situation than, our startup homes and everything in between. But be patient. Mm-hmm. Patient is the biggest thing. Those that are succeeding in this business right now are succeeding because they've been in the business for a period of time. New folks coming in and coming out have a tough go of it. Mm-hmm. I'm not saying that they're not doing a great job. Now, there's a lot of new agents that are doing great jobs, but it's a tough road to hoe for new agents right now because you just haven't been able to experience. Maybe you haven't socked enough away to weather some ups and downs. But stay with it. Stay patient because it will come.
Yeah, we talked about this the other day. There was an enormous influx of real estate agents into the industry over the last 10 years.
Because it was easy money.
And at the end of the day, we are getting back down to this normalcy, if you want to call it, and people that have been in the market or been in real estate for as long as we have, you've seen this. We've seen these things. We've had to recalibrate what we say to our clients and our customers many, many times. Again, it's one of those times, hey, we may have to talk about price adjustments. Well, I've never had to do that before. Well, we got to learn that. And those are the things, that's where, like you said, Mark, the fear tends to come from the ones that have only been in the market for 5, 10, maybe 15 years.
Right.
We're getting back to where it used to be.
Yeah. Here's the thing. It's inexperience. Yeah. It's ignorance. It's inexperience. It's fear. And to be honest with you, it's irrational fear. Mm-hmm. If they gave it a couple of thoughts, it's irrational fear because our body our world was used to this super fast paced market. And when it just slightly adjusted, it didn't even hugely adjust. It just slightly adjusted, and it was just so uncomfortable. Mm-hmm. And they're fearful that it's all coming to an end, and that they're going to have to go back to whatever they were doing before that they didn't like.
Yeah.
And if you just stay focused, you continue to do the things that got you to where you were, and more importantly, you start doing additional things on top of that. Because one thing I will say is, some people might want to hear this, they might not. Business came easy for a lot of people. Mm-hmm. Sometimes you're going to have to work for it. Sometimes you're going to have to get out there and do some things that you didn't want to do, or that you don't want to do to make it work. And if you're going to make it successful and be there to ride the wave when the water starts coming in, you're going to have to do those additional things.
Yeah, absolutely. I would say too, my brain just kind of blanked there for a second. I had something that was it was a golden nugget
a profound moment
that was gonna come in, and then all of a sudden it was like poof, gone.
Well, we are recording this podcast in the afternoon, and our brains don't work nearly as well in the afternoon.
Well, and you'll also you people out there in podcast land will understand now that we do record this live, and we don't just go in and cut things in. So
no doubt. So, well, again, as we pull back everything and we look into it, guys, midway through the year, we're not at the end of the year. There's still a lot of business to be had. You're going to have to, pull up your bootstraps, and you're going to have to dig in. There's a lot of good business out there. There's a lot of people that need our help. Again, we're not, we're helping people in typically in life circumstances. Life has forced them into needing to do something. We're here to help alleviate the stresses and push forward with those things.
So here's what it came back to me. So here's the deal for the ones that have not been in the market as long, that are a little bit. Somebody that's been in the market 7 years probably thinks they're very experienced, but somebody who hasn't been in the market 20 years, this is who I'm talking to. All right, the fear is there because You've got to trust the process. We've talked about this over and over and over and over, because you're seeing your process and things are slowing down. You're not getting as many deals. Things are, it's just not coming in at the level that it came in before. But you have to trust the process, and you have to understand that this works. There were many, many, many real estate agents before the real estate gold rush, let's call it, that were making lots and lots of money in this business. So you can do it still.
100%. Yeah. And it's not easy, but anything worth the amount of money that people expect to get paid is not an easy task. Yeah. If it were easy, everybody would be doing it.
That's right.
And guess what? Everybody did do it. Everybody jumped into it, and it has diluted a lot of this. But those folks are going back to their normal 9 to 5. Which, I'll be honest with you, I don't want to work a normal 9 to 5. That's not my gig.
No.
That's the market. That's where we are. That's what's going on. Unvarnished truth, not sexy, not exciting, but it is what it is. It's important to understand where you're operating and what's going on, and then take that information and then put it into strategies and action. So, guys, we appreciate you tuning in, and good luck for the rest of next year.